Hey, how's it going? Today we're talking about short sales again, and in particular, why are there so many short sales currently on the market? Realistically speaking, there's three main reasons why we have so many short sales. The first one is bad buyers. Back in the day when loans were easy to get, it was very common for buyers to do what was called a stated income or a stated asset loan, whereby they would go meet with a lender and they'd be able to, without having to prove it with any type of documentation, sit there and say they made anything they wanted and they had whatever they needed in the bank in order to get a loan done. Interest rates were cheap, money was cheap, and by doing so, they'd only take a half to a 1 point hit. So if someone could otherwise qualify conventionally for a $100,000 mortgage at 5%, they can now qualify for a $300,000 mortgage at 6%. So they're able to buy what they wanted without much of a financial penalty in terms of interest rate. The second part of this is that there were bad loans. There were loans out there that even if the buyer was in a good position, had the money, had the down payment, they were still fundamentally bad products. Most notorious are these pick-a-payment loans or negative amortization loans or ARM loans. ARM loans being the best option. But the worst option of these was these pick-a-payment or negative amortization. And what those were is that people had the option to pay less than the interest. No principal, not even meeting the interest requirements. So they were actually adding money on each month to their loan. So let's say that the principal interest payment should have been $1,000 total. They were only paying $700, thus $300 a month was being added on to the actual amount they owed on their loan. So as the markets dropped, these people's loans were actually going up, resulting in a double whammy, putting people in a terrible position. And the last one is an obvious one, bad timing. Simply put, the market was not sustainable. We were growing at 15 or 20% each year, annual growth, which is not sustainable. It's not sustainable for an industrializing country, okay? So the reality is there was no way we were ever going to be able to sustain these levels of growth. People were getting into homes to be able to flip them in a year or two and make the money, and simply stated, people got caught with their pants down. The market tanked. The market hasn't come back. It's continuing to decline. And the cold hard reality is people are now stuck with homes. Very typically, if they bought them between 2004 and 2009, they're worth approximately 50 cents on the dollar. Until the market corrects itself by people getting out of their properties through short sale, through foreclosure, or other means, and people can actually buy houses en masse for what they're actually worth or fair market value, unfortunately, the mess that we're in is not going to change or go away anytime soon.